Good morning, everybody. It is December 13th, 2023, 8:45 a.m. We are back once again for another market opening. Good morning, everybody. Hope you all are doing well. It is December 13th, and we've got a lot of headlines today that we've got to discuss. First of all, I hope you are all happy to be alive. That's first and foremost. We're all here. We're alive. And we've got a lot to be grateful for and thankful for because we're all alive on planet Earth today. On top of being alive, we've got PPI data that came in a little bit better than expected. Same thing with CPI. Markets reacting pretty positively to it for now. So we'll see what ends up happening. So we got PPI data to discuss. Number two, we have another Palantir partnership, our fourth partnership. I don't know why I'm showing two hands with four because that means eight, but our fourth partnership in the past week. So we're going to talk about that Palantir partnership. And then we got Jerome Powell, Mr. J. Powell, who's going to be essentially deciding the fate of all of our stocks in the stock market today at 2:30 p.m. I think the rate cut or the pause or the cut or the hike will be introduced at 2 p.m. Hint, it's going to be a pause. That's probably what's going to happen. 2 p.m. Eastern, and then 2:30, he's going to take the stage and for the next 2 hours deal with all these Yahoo Finance reporters, Wall Street Journal, CNBC people, and they're going to say, hey, what's going to happen? And he's going to be like, I'm data dependent. And they're going to be like, yeah, but what is the data telling you? And he's like, well, it depends on the data. And they're going to be like, well, if it depends on the data, can you tell us what the data is leading you to believe? And he's like, well, that depends on the other data. And that's what's going to happen for 2 hours. So it'll be a very exciting day. There's only a select few million people, I think, in the entire world. You all that are here with me are included in that select group of million people that actually care about what this man is going to say, and every little wrinkle and facial expression that he gives, we will be reacting to it immensely, right? We're the only people in the world that cares. The rest of the world is just living their life normally, like they should. We're the ones who care, but we care because we're trying to make some money. So it's a good thing to care. If you cared about anything, I would care about this over some of the other stuff that people care about. So we got a lot to get into. Let's get into it. Big Billy, Steve, Kaios, Colorblind Collector, Midwest. Thank you all for being here today. We got Diane, Win, Steve, Bayray says, so you're too good for the PPI report. I had to watch Meet Kevin. Honestly, I forgot we had PPI this morning. I'm not even going to lie. But usually I don't go live early for PPI. PPI is important. It's not as important as CPI. I remember this morning, but I was like, PPI is like, it's important, but it's not as important as CPI. The markets care a lot more about headline inflation versus the producer price index. Danger, Amit, thank you for being here. Kevin, Richard, Brian Robinson, Raul, Kyle, Marcus, Miami Ren, Duvinson, Ty Gordon, Tabor, Nolan, Garcia, Matthew, thank you all for being here. Lang, David, Ada, Hayamit from Brunei. Where is Brunei? Brunei. This is a country in Asia. It's the only sovereign state entirely on Borneo. It's an island divided between Malaysia and Indonesia. Wow, that's really cool. I don't think we've had someone from Brunei before. I'm sorry if I'm saying it wrong. Ada, thank you so much for being here. This is awesome. Okay. Let's get into it. So PPI came out and it's lower than expected, which is why the market is excited right now. By the way, guys, I don't know if you saw, but the S&P 500 was at 52-week highs yesterday. I mean, I think it was like 3:30 p.m. when I saw this, and I was just like, are you kidding me? Like, this is just phenomenal. This is just incredible to see the S&P 500 hit about 464 yesterday, and I think in the after hours it continued in that respect. Currently, S&P, what do we have? 465. Incredible. 465 on the S&P 500. We're 5 points away from that 470 level. PPI for November came in at plus 0.9% year over year, below expectations of plus 0.1%. So just 0.1% below what we thought. And then core PPI for November came in at 2% year over year, below expectations of 2.2%, month over month below expectations of 0.02. So this was really good. I mean, this was really, really good. PPI in November came in below expectations, and then core PPI for November also came in below expectations, which is, essentially what we needed to see. Jesse has an interesting tweet here. PPI came in lower than expected, probably from a drawdown on the Chinese economy. I actually agree with him here. The reason why I think we saw PPI come in lower, there's a variety of reasons, but one of the biggest reasons, I believe, is because China's economy is struggling. I don't want to get super into it today because I'm doing research on it. And as I do more research, I'll be able to explain it in a more meaningful way. Let me pull up the actual PPI report from BLS. But, dude, China's economy is in a tough spot. Like, it's in a really tough spot. And the issues that we're seeing in that economy, we're seeing youth unemployment go higher. They have a ridiculous real estate crisis. Their banking sector is all out of whack. I think, if anything, that economy, so there's two perspectives to it. The bull case for them not invading Taiwan is that their economy is screwed. And if they invade Taiwan and they get sanctioned by the entire world, then, like the collapse of the Chinese empire might be soon. The bear case for why their economy is bad is that in order to revive nationalism in the country, Xi Jinping basically says, all right, everybody, let's invade Taiwan because that's the only thing we have left to be able to rally over. And so it's going to be really interesting what happens over the next couple of months. And I'm doing more research before I talk about it in depth, but the Chinese economy is not necessarily doing this well. So this is the PPI index we're getting right now. The index for final demand for less foods, energy, and trade services edged up 0.1% in November, the sixth consecutive advance. For the 12 months ended in November, prices for final demand, less food, energy, and trade services rose 2.5%. Final demand prices decreased 0.4% in October and rose 0.4% in September. On an adjusted basis, the index for final demand increased 0.9% for the 12 months ended in November. Again, the market was expected 1%, so we came in a little bit lower than expected, which is not bad, when it comes to PPI. So a couple of core things here in terms of commodity types. Processed goods for intermediate demand, prices for processed goods for intermediate demand were unchanged in November, so that didn't go up or down. Within the index for processed goods and intermediate demand in November, prices for electric power advanced 1.5%, so we're seeing energy go up a little bit. The indexes for diesel fuel, natural gas to electric utilities, thermoplastic resins and materials, and soybean cake and meal also moved higher. Conversely, prices for industrial chemicals fell 3%. The indexes for gasolines, processed poultry, jet fuel, and softwood lumber, not edged work, also decreased. That is not a surprise. Obviously, yesterday in the CPI report, we saw the index for gasoline go down 6%. Energy index writ large went down 2.3%. So seeing that we have some energy and all the things that rely on energy like processed poultry and jet fuel start to come down makes sense, even though we had some other things go up. Unprocessed goods, prices for unprocessed goods for intermediate demand declined 1.4% in November after falling 1.8% in November. So we're still seeing a little bit of decline. And then a major factor in the November decrease in prices for unprocessed goods for intermediate demand was the index for crude petroleum, which dropped 9.5%. Again, we're seeing this a lot in our oil prices. It is starting to come down. Prices for slaughter steers, heifers, corn, slaughter burros, and gilt slaughter chickens, raw-con, also declined as well. The index for carbon steel crop advanced about 8%. Prices for natural gas, hay seeds, oil seeds also increased. Now, what is the producer price index? It is the amount producers are willing to pay for their goods, right? For their services. So for in the context of a burger, right? Like if it costs more for Burger King to pay for the poultry, the bread, the tomatoes, the lettuce, the everything that goes into making a burger at the end of the day, it's going to cost more for consumers to pay for it. So if CPI is coming down, PPI on a headline also should be coming down to an extent. Now, this month, you could argue, is a little bit skewed because gas came down so dramatically. So the energy index probably had a overweighting in terms of how much PPI declined. But in general, if we're paying less prices, producers are paying less prices to create. The real flux in the economy is when producers are paying less prices for goods and services, but we're still paying more prices. And that's essentially when you get price gouging. But that's not happening, even though food still is expensive. I mean, I told you guys yesterday, I went to a Subway and it was like $16 for a foot long. I was like, no. Like I grew up with $5 footlongs. I'm not paying. I had a Subway near my school in high school. I used to literally go get a $5 footlong. I was chilling. It was great. $17 with tax for a footlong. You're out of your mind. So I just didn't get food yesterday. I still ate, but I didn't get Subway. So we are seeing food still not be okay, but gas prices have come down dramatically, which is overall good. That's why we're seeing the economy and that's why we're seeing the market react pretty nicely to the report that we got today. Win says, I really think Amit can out-debate Vivek. Dude, I have respect for Vivek because obviously you guys know I was a national debater. I was on the international USA debate team. I traveled across the world. I was the I was the third best speaker in Europe, but who's counting? So I do have an affinity for communication and debate. And honestly, the reason I'm able to do this market open is because of those debate skills. Like the ability to just get up and talk is really because of years and years of debating. Vivek is one of the only candidates over the past 5-7 years of really following politics that has impressed me when it comes to debates. Now, Trump impressed me as well, but not really because of his debate skills, more so because of his ability to cultivate an audience and like say the things that you're not supposed to say, but it still resonates with the audience. Perception is often reality when it comes to debates. Vivek, though, actually just can like debate. That line that he had on Nikki Haley of like, you can't name the provinces. Carlos last night on Finest Junkie says she named them 10 seconds later. Dude, I didn't hear it. And if I didn't hear it, a lot of people did not hear it. So I think what we're seeing with Vivek, I don't know if he's going to win. I do think Trump's going to pick him to be the VP. Honestly, I think Trump would, and I think he would accept if Trump does. But I think Vivek is setting a new standard for how intellectual you can be and how ferocious you can be when it comes to debating. and he's doing good. I mean, I will see what ends up happening, but he is one of the candidates that's standing out to me, even though the establishment is really putting their support behind Nikki Haley. Okay, so let's take a look at some of the arguments that we have, or I said arguments, I'm in debate mode right now. Some of the stocks. Every stock is basically an argument, right? It's presenting an argument for why you should buy it or sell it. Let's look at some of these equities in the pre-market. Palantir up 0.69%. This PPI report came in really good. For those that are just joining, PPI came in just slightly lower than expected, which is why we're seeing the market be a little green. SoFi, $7.98 right now. SoFi has been in a tough bubble right now from $7 to $8. I think we talked about it 2 days ago. Their short float is now 16%. So 16% of the billion shares that are out there for SoFi are sold short. Palantir actually went down to 6% from 8% a couple of weeks ago. So we're seeing Palantir go down, SoFi go up. S&P 500, 465 in the pre-markets. It would be insane if Tom Lee's right and we end up getting to that 4,700 level. I mean, dude, he said a couple of days ago on CNBC, like, yeah, we could rally another 7%. I mean, like, if that happens, it would just be incredible to see that happen. And I think on Finance Junkies last night, we were really discussing why could this happen? Why would the S&P continue to go up? Why would the markets continue to go up? And I'm going to present you guys a little bit of a bear case in a second for why maybe the month of January is not really going to be the best. Snowflake is up a little bit. Coinbase is up a little bit. Marathon up. Riot up. Bitfarms up. Hut 8 Mining up. AMD 138. AMD was 118 less than 2 weeks ago. AMD just absolutely on a tear. They have added $40 billion of market capitalization to the company. The company was worth $180 billion, now $222 billion on the day. And, you know, the reason for that is because they're going at NVIDIA's neck against that H100 chip. And, you know, AMD is not valued as expensively as NVIDIA on a PE basis. They're more expensive, but market cap is lower. Maybe a lot of funds are like, you know what, instead of investing in a $1 trillion company, let's invest in a $200 billion company in a space that's catering at $45 billion a year in a market that's expected to be worth, $700-800 billion by 2028. Let's give an AMD a shot. Do we not think AMD is going to be a big winner? If they are, you know, I think that's why the market's getting kind of excited for AMD right now. Tesla at 234, down about 0.93% today. So there was a headline that actually I got caught up in. Tesla, Wall Street Journal, I saw as soon as I woke up, Wall Street Journal said Tesla is doing a recall for 2 million cars. Tesla's not doing a recall for 2 million cars. That's not happening. Tesla's doing a update for their software for 2 million cars. And so that Wall Street Journal headline got me because I was looking at it. I was like, oh my God, there's a recall. But I looked at the stock and it was down 1%. I was like, dude, if Tesla was recalling 2 million cars, they only delivered 1.8 million last year. Like I feel like the stock would be down like 15%. But it was not a recall. It was a software update. So the Wall Street Journal, I respect them a lot, but they got me. It's that type of clickbait stuff that's like, that is absolutely incorrect. Even if it's a technical recall, it's not like, GM that has to literally bring the cars back to the factory, because Tesla's a tech company, more than it is a car company. So it's definitely a little bit of fake news, or not necessarily the most correct news at the end of the day for Tesla. Jesse, good morning. Thank you for being here. Nick Piercy says, I have $60,000 waiting for Q1 crash coming, only 17% of my portfolio. Let's actually pull up a couple of charts that kind of indicate why there may be a little bit of a crash. This was posted on Chris's Patreon today. I thought it was actually a pretty decent post. If you guys watched Finance Junkies last night, he is getting a little bit more bearish on what we're seeing in the broader economy. And the reason for that is because he thinks there's a world in which inflation starts to reaccelerate. And I want to talk you through a little bit about his thesis here, because if he's right, then having some cash on the hand is not actually the worst thing in the world. Chris says, decided to move more cash off the sidelines, bought Palantir and some more fintech biotech stocks, starting to think no hard landing. Tech probably bottomed 6 to 9 months ago. I agree with that, Chris. I think we're not seeing Meta at $88 again. Meta's at $340. Do we see Meta at $300? Yeah, that could happen. Sure. Do we see Meta at $250? I don't know. I don't think that, but Meta at $250 is basically Palantir at like $8. I don't know. Palantir at $10, call it that. I don't know. I think, again, and this is what we've been trying to figure out over the past couple of morning opens, is like, we're trying to figure out, we're in this beautiful spot where unemployment's going down, inflation's coming down, even if it's not coming down precipitously, it is coming down. So you got inflation coming down, you got unemployment coming down. Growth is slowing down, but it's not necessarily falling off a cliff. So do we have the next 12 to 18 months before a cataclysmic recession, which either it's going to happen because everyone thinks it's going to happen, or it's going to be delayed until 2025, 2026, or it's never going to happen because by 2025, we're midway into the quote unquote roaring 20s. Okay. And if we're in the roaring 20s and you've got AI being operationalized all throughout the enterprise. You've got earnings growth at a succinct level. You've got the government essentially figuring out how to get their spending under control over the next couple of years. I don't know if we get to that horrible 2008 recession. Remember, we haven't had the 2008 recession. And since 2022, the reason why a lot of analysts missed out on making a lot of money this year is because all of them, Mike Wilson in particular from JP Morgan, has said that 2008 recession is around the horizon and it should be coming. And it hasn't come. This 2008 GFC 2.0 is not here yet. And so I think a lot of analysts are confused right now because obviously we got yields incurred, which signals that there should be a recession soon. You've got the S&P hitting 52-week highs in a year where most people did not think there was even a chance to have a little bit of green. And I think it's because a lot of people forget that in 2022, we went through a lot of pain. And it seems like that pain wasn't enough for a lot of these analysts when in reality, I think there was, a significant amount of pain that ended up leading to the bottom, as Chris is saying in the chat, for some of these stocks. So what is some of the bear cases going into the next couple of months? If the Federal Reserve aims to make a significant impact on inflation in 2023, it will need to maintain interest rates at their current levels for an extended period, meaning those March cuts are probably out of the question. The figures below vividly illustrate the elevated levels we are still experiencing in shelter inflation when compared to the past 30 years. As you can see, shelter on one of these indexes, the consumer price index at 6.53. We're seeing a rent of primary residency and owner's equivalent rent of residencies. Those are still at levels that are much higher than they were before. Transportation, motor vehicle maintenance and repair, motor vehicle insurance is much higher than it was before. So even though CPI came down, there are certain levels of inflation like shelter, motor vehicles, used car prices, etc., that are kind of nagging on this 3% level before we can get to that 2 handle. Now, as you can see, the positive news is that real-time data is revealing a couple of promising developments. Apartment construction is currently at a multi-decade high. This is a very interesting chart, as you can see on the screen. Nearly 1 million apartments are under construction today. I mean, back in 2010, that number was just above 100,000. Back in 2020, that number was at 600,000. In 2023, we're at about 980 to 1 million apartments that are on the rise, which means that vacancy rates are on the rise. This upward trend is likely to exert pressure on the rental market, and over time, it is expected to have a ripple effect on the housing market. We're seeing mortgage applications go up, more mortgages start to go down from that 8% at the top a couple months ago to about 7.1%, and we're seeing housing prices start to go down, so that these fantasy prices that we had over the past couple of months are starting to materially go down a bit more. That means that there is more disinflation to come from a shelter perspective. And obviously from an energy perspective, we've seen it pretty dramatically. But the question is, when is that going to happen? And this is why I think the dot plot that the Fed is coming up with, inflation year-over-year percentage change, as you can see right here, CPI is at 3.38 in December, PCE is at 3.02, November came into 3.1. The street is expecting core CPI in December will be 4%, which means it'll be unchanged or barely changed, and it'll be 3.38 in the month of December. That's not going to be good, because what we had in November was 3.1. If we go to 3.38, that's not going to be this. Why is that happening? Because of shelter. Shelter is a lagging indicator that is not being factored into the Fed yet. The dot plot they're going to put out today, they're going to release it around 2 p.m. That did not take into account the CPI or PPI that we got over the past 2 days, which honestly, even if they did take that into account, that wouldn't matter. So the bear case over the next couple months is that shelter is still going to be bad in inflation. Transportation is still going to be bad. These lagging indicators are not going to take effect until February, March, which means in January or December, if we see CPI and PPI start to tick a little higher, even if it's just like something we know is falling off a cliff, which essentially happened with energy over the past couple of months when we had inflation at 4%, we knew that was going to come down dramatically. And then we got that monster decline back down to 3.2 over the next 2 months. Until we see that, the Fed is not going to cut rates in March. So this idea that the Fed is going to cut rates is just absolutely insane, in my opinion. I do not think the Fed is cutting rates anytime soon. I think June is likely the earliest. And I think the dot plot they're going to release today, and that dot plot, remember, is basically their guide on essentially where they think interest rates will be over the next couple of years. The last dot plot they put out had interest rates barely changing until 2025. I mean, I think it was down like maybe 50 basis points. We'll see if that changes this time. We'll see if it's down like 75 basis points or a full percent. But if the dot plot they put out today is pretty bearish and Jerome Powell gets up on stage and he's like massively hawkish and bearish and just says, you guys got to chill. This inflation thing is not going away. We're, still struggling with core. We don't want to see it reaccelerate, which is basically everything in the charts I was just showing, that a lot of this stuff looks like it's going to come down. But as of now, the market is expecting it to tick a little higher, at least over the next 2 months. Then I think maybe the market, if they believe Jerome Powell, is going to chill out a little bit and they're not going to continue to rally. And we might see a decline. Or the market might say, screw you. We know inflation's falling off a cliff. We know that your data is lagging. We know that shelter is falling off a cliff. We know that all these things that you guys are supposed to be looking at, because you're supposedly data dependent, but you don't even look at data that's real time. You're not actually looking at the data, and we're going to buy stocks because we know eventually you guys are going to cut interest rates because inflation is going to get so low that there's going to be no point for you to keep interest rates that high. That is something I think the market might think of today as well. It's either going to be one or the other. Either the market's going to believe you and say, all right, we should sell stocks, we should be afraid, or the market's going to be like, we do not believe you, Jerome Powell, and we're going to continue to have this rally going. And so we'll see what ends up happening from there. Chris says, my data shows institutions are buying, and with so much money on the side, when the Fed does drop percentage points, big money will come off the sidelines. I'm betting things grow from here. Could be wrong. I agree. I mean, that's another thing we've talked about on this morning open many days, which is the $6 trillion that are in money market funds. They got $70 billion last week added to money market funds. Why did $70 billion get added to money market funds? Essentially because you're getting 5.5% risk-free. My Robinhood account's giving me 5%. SoFi is giving you 4.5%. I mean, like, you're getting so many APYs out there that you don't need to take the risk to invest in the stock market. Remember, when you raise cash right now in the stock market, it's not that scary because, yeah, you might miss out on 10, 15% if something runs, but you're still getting 5%. Whereas in 2020, you're getting nothing if you're in cash. And so, that does play a dramatic effect on the amount of people and the amount of liquidity that can ultimately enter into the stock market. Because if you're still getting something, like I have a cash position right now, I would say I'm 10% in cash. No, I'm like 15% in cash. The reason I said I'm 15 is because I'm getting back some collateral that I put up for some cash accrued puts on Friday. So that'll put me in about 15% in cash. That cash position is collecting 5%. Which is like, it doesn't make me feel so much pressure. Like, I got to put this in the stock market right now because the stock market could go down and then I'm, sitting on some losses, paper losses, whereas I could be collecting 5% risk free. So I do think that once that interest rate falls down and I can't get 5% anymore, right? Robinhood can't give me 5% if the Fed's fund rate is not 5.5, right? They're going to have to make decisions and it's going to go down to 4.8 and 4.7. And eventually I'm be like, well, there's not that much return here. I need to take some risks. I'm in the United States of America, the land of the free, home of the brave. We take risks in this country. Let me put some money into these companies. Hopefully I pick the right stocks, and or even if I just pick the index, and let's see if we can get a better return here. So that is kind of, I think, the core issue we're dealing with right now. And Jay Powell is going to, basically tell us over the next, in the next 5 hours, what he thinks should happen to the market, without exactly telling us what should happen in the market, because he can't give very specific advice. Okay, Palantir. Let's talk about Palantir. Palantir has some news today that we've got to discuss. This was actually really interesting news that came out with Palantir. They extended their partnership with a bank in Italy. By the way, one of my friends is in Italy right now. He showed me the Italy Starbucks. He was at the Milan airport, and it looked really nice. Like the coffee he showed me, the little, that thing they draw on the coffee. What's that thing called? The white like heart or something that they draw on a latte. It's like they design it or something. It just looked really nice. It looked better than any Starbucks in America that I've been to. I was like, oh, this looks nice. There's like a factory in the Italy Starbucks as well. It looked really nice. But he's in the Milan airport. He's in Italy, and Palantir signed a partnership. Let me just share my screen right here with UniCredit. So UniCredit has been a bank that we've worked with since 2018. Now, fair disclosure, I don't know shit about UniCredit. I did not know we were partnered with UniCredit. Latte art milk foam. Correct. Latte art milk foam. That's what it is. Latte art milk foam. So it looked, he showed me a picture of it in Italy. It looked really nice. I did not know we were partnered with UniCredit, but this is a bank. Let me know if you guys know about this bank. It's a big European bank headquartered in Milan. And we extended a 5-year partnership with them today. So reading from this a little bit, Palantir and UniCredit first partnered in 2018 as the bank sought technology that could streamline sales, spanning jurisdictions, better operationalize machine learning and AI, enforce policy compliance, and enhance decision-making on the front lines. The bank chose Palantir Foundry as the operating system for the enterprise, leveraging a single open and integrated platform across entities and business lines in enabling synergies. This is really interesting. In the last 5 years, Palantir Foundry has generated considerable value for both UniCredit's credit controls functions and its commercial banking operations, driving process efficiencies and improving campaign management. For example, UniCredit noted that over the course of 2023, advanced analytics and propensity models on Foundry helped the bank generate a fourfold increase in customer redemption of protection products through better targeting. So this is a 5-year extension. This to me is likely to $10 to $15 million extension. The reason for this is because the average Palantir client pays about $2.9 million a year. So if you just, imagine 5 years, probably extension, $2 million, $3 million. I would argue it's like a $10, $15 million extension, which is not bad. And it's another partnership that is international. We have not seen a lot of international commercial growth. Quite frankly, international commercial growth has been really bad. And so it's really nice to see that we're getting some more international growth. Dario says, geez, UniCredit is one of the top 3 banks in Italy, and they also have operations all over Europe. That is really good news, Dario. Dario, I think you're Italian, given your last name, Martinelli, if I'm saying it right. Yeah, so I guess UniCredit's a big bank. See, and this just goes to show how big the world is, bro. Whenever I think of like market opportunities, I'm trying to remind myself, dude, there are probably thousands of people that work at UniCredit, right? Like people that I have no idea what their lives are about, but they're all living their day-to-day lives or working with UniCredit using Palantir's Foundry. And when I think we're investing, I think we have to remember like how big the world is. And, this is one bank that's in Europe, that's in Italy, has a lot of influence. There are so many more banks, so many more customers Palantir could get. And that's why when people say, it's a little bit overvalued or whatever, I'm like, dude, the TAM is very large. Palantir just has to get the growth to capture it. But if they do, this is a company that's going to be very big in the next decade. So this news comes after 3 partnerships in the last week. Number 1, we got a $40 million Fujitsu extension in Japan. This is a technology consulting firm that's leveraging Foundry and AIP large language models for their clients. They're extending their partnership with Palantir. They started working with them back in 2020. That's an international commercial partnership back in Asia. We got a partnership with Plascred, which is a waste management company. I talked about that on yesterday's episode of Daily Palantir. That's in Canada. That's another international commercial partnership. We got a partnership with HISA, the Horse Integrity Safety Authority. That's in the United States, but that is another partnership in general. And then we get today a partnership extension with UniCredit, international bank headquartered in Italy. So we're seeing some more international commercial growth on Palantir's side, which is really good at the end of the day for Palantir to see some more of that growth continue to happen. Dario says, yep, that's correct. I'm the same dude who wrote you about Policino Gemelli being the biggest hospital in Italy. Okay, I just butchered that word. And I know you're making fun of me right now, Dario. You're probably laughing your ass off. Policinilio Gemelli. I can't say it right, dude. I'm so bad. If you know the word of the day is, that I can't talk when it comes to this. Professional debater doesn't know how to talk. But yeah, that Italy report was also really, the Italy hospital was really interesting because that's the 38th best hospital in the world I saw in some of the rankings. So, I mean, it was really interesting to see that kind of play out. And obviously in the healthcare space, Palantir is continuing to have a bigger role. A couple other things I want to say about Palantir before we move on from this. I think a lot of people forgot, I tweeted this yesterday, Palantir has one board member on the National AI Advisory Committee. You probably don't even know what the National AI Advisory Committee is, but it's a committee that the Biden administration set up to help the enforcement and regulation of AI over the next couple of years. And so they set up this committee. There's 10 people on the board. Palantir is one of the only commercial companies that has someone on the board. Anthony Back, who's the head of AI at Palantir, he's on the board. Everyone else you can see is from the ACLU. They're the professors at Vanderbilt. Like all these important people. We got someone from the Miami Police Department. All these people that are on this list. And then you got the head of AI at Palantir. So another reason kind of pointing to what Palantir's moat is in regards to being able to implement and help the government think of ultimately regulation and where the world should be going and how they should be thinking about regulation in the AI space. I bought 20 shares of Palantir yesterday as well, 1744. Again, not waiting to unload massively the dry powder I have. I'm waiting for 15. When I get to 15, you guys will see me live unload that dry powder. But right now, just nibbling here and there. And then one more thing I wanted to share with you guys before we move on from this is this argument about Oracle. So someone tweeted yesterday about Oracle. Let me see if I can pull that up. They essentially said, hey, should Oracle buy Palantir for $60-70 billion? Because that would be, a really good buy. And I said, look, I sympathize with the argument you're making, but I just don't think that's the best thing to do. I actually can't find the tweet. I'll find it in a second. But I wanted to ask the chat, do you think that would be a good buy for Oracle to buy Palantir? The argument was $60-70 billion. That would put Palantir about $30-40, even $35, something like that. That would be a good acquisition for Palantir. the reason I'm bringing this up is because when I see partnerships like I've seen over the past couple of weeks, Fujitsu Extension, Plascred, a plastic waste management company, like these random companies you never heard of. They're partnering with them. The HISA, Horse Integrity Safety Authority, I didn't even know they exist. Extending partnerships with Unicredit, the hospital in Italy. Like, I believe what Palantir is doing, especially with some of these smaller deals, like with HISA, Plascred, and Trafigura, which they partnered with back in May of 2022, is they are essentially setting up the foundation. I talked about this on the newsletter last night, to essentially capture very large markets by working with small companies. So let me give you an example. Plascred is a plastic waste management company that they signed a partnership with yesterday in Canada. Is this company going to succeed? We have no idea. Is this company going to become a massive company? We have no idea. But the company is trying, very similar to the SPACs, the company is trying to be on the front lines of creating patent pending technology that is proprietary to them to be able to remove plastic from the environment in a way that is efficient, effective, etc. There is a lot of data that is involved in that process. And when there's a lot of data involved in that process, the question becomes, how do you have an analytical framework and software and tools to be able to leverage all of that data to be actually succinct in doing the thing that you want to do, which is remove plastic from the environment? I don't even know if Palantir is making money off that deal. I think what's going on in leadership at Palantir is like, hey, let's get that customer in. Let's get that client in. They seem to be doing some innovative stuff. Let's give them our software. Maybe they'll pay us. Maybe they won't. But let's just let them use our stuff because we have another big client, i.e. the US government, that's paying us, $300 to $332 million a quarter. We will subsidize the cost of this client. We'll make sure we're profitable. Well, we don't need to make a lot of money off these guys because they're a small company. But if they figure stuff out, and the R&D that they give us in order to really be able to enable one day a company like BP, that is a very big contract, or could argue a multi-year billion-dollar contract, multi-billion-dollar contract in the future, a company like BP that wants to remove plastic from the environment, that wants to transition to renewables, that wants to do XYZ, blah, blah, blah. We have the R&D because back in 2023 to 2025, we worked with Plascred, this random company in Canada, to be able to figure out all this stuff. I genuinely believe, and this was my bull thesis on investing in Palantir. This is why I'm so excited to cover the company every day. I don't see companies like Palantir that are in the enterprise SaaS software space that have a software that is so vertically integrated and horizontally integrated across every different sector that they can go into plastic waste removal and then making sure horses are healthy and safe in the same week, work with those two companies, build out software and operationalize their data in a meaningful way to be able to then land bigger contracts in the future with a company like BP because they have all this R&D that they've been working with smaller companies. And climate change, environmental solutions, these are trillion-dollar problems. These are big data problems first and foremost. And I think to solve those big data problems, you need a lot of R&D. You need a lot of experience. You need to know how to operationalize data in a meaningful way. And I think that's what these partnerships are gearing up for. Which is why I think Oracle should not buy these guys. I think the company, Karp said in June of 2021, people forget, Karp said verbatim, Palantir can be 20x the size that it is today. Palantir was a $22 stock at the time. That you're talking about you're talking about a very big stock, 20x. You're talking about $400 stock. You're talking about a close to $1 trillion company. Karp, with all of his bravado and ego, obviously he was humbled in 2022 when interest rates did what they did from a stock price perspective, but his bravado around the company's potential never went away. And so I think he still believes in that 20x vision, even if it's from those prices, because he sees that working with a plastic waste management company and Trafigura, which is a company that tracks carbon emissions throughout raw goods in their supply chains, those partnerships are priceless for where this company is going in the future. We saw they're taking over 16% of beds of hospitals in the United States. They are managing, did we forget where they are managing the entire NHS's healthcare system? Like I literally yesterday on the newsletter, I was writing that and I was like, oh yeah, they did get the NHS deal. like there's so many ways that they're being on the front lines of industries, even if they're not necessarily recognizing the revenue or growth from that yet, that is going to happen in the future, that I just don't think this is an opportunity that I would want to miss out on. As Keep Walking also says, Karp would never sell. I agree. I don't think Karp is ready to sell this company either. So I just think there's a lot of growth left for Palantir in the future. And this partnership today was really nice to see because it just shows how much they're expanding. We also tend to get more partnerships towards the end of the year, December. I would also imagine we get more government contracts soon. The Army Vantage contract might end up being announced on Friday. This is the contract that Louis De Palma got super butthurt about. And look, he might end up being right that we don't get the same amount of money that we got back in 2019. I don't think that's because Palantir has declined as a company. I think that's because of a lot of factors. But we might get an update on that Army Vantage contract that's coming out potentially on Friday, from my understanding. And that might be an extension or a renewal of that contract as well. So that is the update on Palantir, and we will see what continues to go from there. Let's get an update on rate cuts because we've got a lot of different things going on in regards to rates. The Fed is going to be meeting today at around 2:30. Let's get an update from Barclays on what they think is going to happen in 2024 when it comes to rate cuts. Here we go.
Talk more about the state of the economy, the markets, and maybe what we'll hear from Jay Powell a little bit later today. Megan Graber, a global co-head of debt capital markets at Barclays. Good morning to you. What are you expecting at 8:30? But maybe more importantly, what are you expecting at 2:30?
Yeah, I mean, I think a third consecutive hold is a given this afternoon. I think the bigger question is what's the path forward? That's going to be the more closely watched piece of the equation. And between a stronger than expected employment report and firming CPI, I think Powell arguably has even more rein than he had on December 1st to retain a tightening bias and to push back against this speculation of more rapid cuts. So, with that as the backdrop, I think we're calling for a dot plot that's likely to underwhelm market expectations. I think we likely see 2 25 basis point cuts in 2024 in that dot plot. And
market's expecting around 4 to 5 25 cuts in 2024. So if we get 2, that could be a little tough for markets.
Expect to see also a nod to the easing of financial conditions since that November meeting. I think the bigger question is, will the market actually listen to Powell this time around?
Well, but let's talk about what that language even sounds like to get you to you're only talking about two cuts.
We're talking about it. Well, I think there are 2 cuts baked in the dot plot. I think, we are admittedly amongst the most hawkish on the street. Our call is actually for a single cut in December. And that's, and that if rate cuts do come in quicker succession, it's for all of the wrong reasons, meaning like there are more material cracks that have begun to show in the economy. And that's tied to the inflation landscape. I think barring more material progress on the inflation front, we think the risks remain skewed to the Fed easing at a fairly glacial pace. I think they're going to try to buy that optionality as part of the rhetoric here this afternoon.
Well, but that was going to say, in terms of the rhetoric, I made this point yesterday. Other people seem to disagree with me that if you're Powell, today's not the day to say, well, we're really thinking about easing in 24, and we'll talk to you about that. Why wouldn't you just sort of say we're going to be very data dependent, hang out? We're hanging out here for a while, not freak people out, but also you need some of the work to be done for you through the jawboning unto itself.
I think that's right. The market's clearly gotten over its skis here. So I think he needs to lean into a more hawkish stance. I think the suggestion will be that they'll keep a tightening bias and even potentially suggest in the language that if they need to hike again, they will. I think it's more about retaining control and ensuring they've got confidence that 2% target is within reach. At this point, based on yesterday's numbers, we've got a ways to go before that's a reality. And the easing of financial conditions is problematic for them.
So speak to that, though, just on a natural basis, how long do you think it would take to get to 2%? Just living through where we are now, supply chains, everything else.
Yeah, I think there's not a major economy barring China that probably gets to 2% inflation by year end 2024. Our call is 2.8% by year end. So
interesting. So she thinks 2.8. I think she's a little too hawkish there. I think we could get to 2.5 by year end 2024. I don't think 2.8 is. I mean, I get why she's saying it, but I think we can get lower than that.
I think we're well into 2025 before we're hitting that 2% landing. It doesn't mean they can't pivot and start cutting prior to that. I think they'll be preemptive, but we think that doesn't play out into the fourth quarter.
Okay, so for everybody else who's so-called playing at home right now, how do you see the equity markets reacting as a result of what you're just talking about?
I think we're reasonably optimistic as we head into the turn of the year. I think this is more about positioning. I think we're actually seeing the cuts priced into the market are reflective of a bullish sentiment. And, when we talk to buy-side players, they're looking to re-risk. So in my eyes, this is about, positioning, contributing to those 4 to 5 cuts that are baked in rather than some deeply rooted belief that the economy actually warrants those cuts. So we think we'll continue to see risk assets across asset classes hold in well, even with a slightly more hawkish stance from the Fed.
And the reason I think she's saying that is because she thinks that eventually the market will have to cut rates because there will be some crack in the economy, which means some risk assets should do well, some risk assets won't do well. But I can understand Barclays' perspective. It's not like their perspective is crazy here. I just think that shelter argument on inflation is what's going to get us below 2.8. I mean, we're at 3.1. So she thinks by the end of the year, that means we have 12 CPI reports coming in next year, 12 months of the year. She thinks we're not going to get from 3.1 to 2.8 until the end of the year, which means he obviously believes there's going to be a massive reacceleration of inflation. That could happen, but I think there is enough lagging indicators to say that we can get to 2.8 way quicker than she thinks we can get. I think that's a little too hawkish, quite frankly. 2.5, 2.4, I could understand. I mean, hell, a lot of analysts think we can get to 2% by next year. It just depends on how intense inflation is going to be able to come down. But, as you agree, as Nick says, inflation is very sticky. There are parts of the economy that are incredibly sticky with inflation. And, it's, again, I use the analogy of losing weight. When you get down from 180 to 150, it's hard to get from 150 to 130 because it's just harder to lose weight. 10-year at 4.17. So 10-year came down in the PPI report. For those that are just joining, thank you for being here. PPI came in at 0.9% in November, below expectations of 1%. S&P 500 at 464.88, down a little bit from where it was at 465 at the pre-markets, but it is still green. And the reason it's green is because it costs less to produce items via the PPI, which means it is ultimately good for consumers because it will cost less for us to pay for those items. So we're seeing a little bit of a decrease in inflation in general, but not a massive decrease. Here's a piece of news that just broke this morning that I really want to discuss. We got about 5 minutes until the market open. Thank you, everybody, for being here again. OpenAI is apparently paying content publishers for their content. I didn't think this was going to happen, but this is happening. OpenAI is paying Politico parent Axel Springer, which, by the way, is a Palantir client based in Germany, for using its content. They're a major media company. The generative AI company reaches multi-year pact with owner of Politico, Business Insider, etc. So Business Insider, not necessarily my business publication of choice. Politico, a little bit better, but they publish a lot of content. I mean, they publish like thousands of articles every single day. So under the agreement, OpenAI is going to pay to use content from Axel Springer publications, which include Politico, Business Insider in the US, European properties Build and Welch, to populate answers in ChatGPT and train its artificial intelligence tools. When ChatGPT uses information from Axel Springer publications to answer a user's query, it will include links to the original sources from the information below the answer. The company said in a joint statement, the new format, which would generate an answer in the form of a summary, is set to debut in the coming months. The aim is to ensure that those websites get credit, compensation, and web traffic. This is very interesting. The reason this is interesting to me is because I thought OpenAI was going to keep getting away with just stealing content. Apparently, they're starting to pay for it. And this is actually where I think the future of content is going. I mean, at the end of the day, if you don't, search on Google and you can't click on the link, which is the way that the company gets traffic, and you get a ChatGPT answer. By the way, I was using ChatGPT a lot yesterday. I mean, a lot. And so, I mean, I'm just getting more and more used to it. If you don't pay for the content you're training your model on, the question becomes, how does the original creator of that content get compensated for their work, right? OpenAI will be able to display answers and train its technology using their content. Axel Springer will also be able to use OpenAI's tech to improve its own products. Quote from chief executive says, we want to explore the opportunities of AI-empowered journalism to bring quality societal relevance to the business model of journalism to the next level. And the deal is not exclusive, which means they can generate revenue from other deals with generative AI content. OpenAI must love this. The reason OpenAI loves this is because all they care about is getting the training data. That's it. I mean, they will pay whatever to get the training data. They get that training data, they are absolutely good to go. And so in the context of OpenAI, this is a massive deal for them because all they need is the training data. The more training data they have, the more proprietary, or the more essentially proprietary models they can build off that training data. And this is also something that Grok from Twitter has an advantage of as well. Grok from Twitter has a really, really good advantage because they get real-time data immediately. I mean, when you're tweeting something, at 500 million times a day, their models are trained on all those tweets. So as soon as those tweets come in, they can give that real-time data. Now, Elon's not paying anybody for their tweets to train his model. And I don't think he has any intentions to do so, especially because that's probably part of the user agreement. If you sign up to Twitter, your data can be used in all these types of ways. But OpenAI doesn't have a social media platform where they're amalgamating all that data. They have to be able to pay for that. So it's really nice to see this. I also think this is going to influence business use cases in the future. Like Google's not going to get away with training Bard without paying some of these sources, right? So I think the Wall Street Journal, Business Insider, New York Times, I think inevitably they're going to get deals, not just off advertising. They're going to make like millions of dollars a year, hundreds of millions of dollars, leveraging their content to Google and ChatGPT. And basically be saying, hey, you can take our content and you can just give whatever results you want, but you have to pay for it up front. And then the question simply becomes, can Google and ChatGPT build a business model around that? Because if they can't, then it's not going to be the best. There was not a recall at all. I thought there was a recall on Tesla. There was not a recall. It was a software update. So Wall Street Journal got me on that headline. I woke up this morning, I saw the headline. There's like Tesla's recalling 2 million vehicles. And I was like, what? 2 million? And I looked at the stock. The stock was barely moved. I was like, the stock can't be barely moved at it's a software update. So Wall Street Journal, speaking of media and journalism, they got me on that one. So Tesla's fine today. All right, 9:30 a.m., December 13, 2023. PPI came in better than expected. Let's see what happens to the stock market. Jerome Powell will be talking later today. Thank you all for being here. The stock market, once again, is open. Wake your ass up. Here we go. It is time to get back in to the stock market and see what we have got going on. Palantir, 1769 on the day. We got it up 0.94%. It fell to about 1720 yesterday. 1767, about 20 shares at 1744 yesterday. Palantir up a little bit on the day. Bitcoin, 41,355. Bitcoin was at 40,000, like, where was it at? 40,800 a little bit later, or a little bit about like 5-6 hours ago. Right now, bouncing back to 41,350. So bouncing in that $40,000 to $41,000 range, but still staying above that 40 level. IWM shares of Russell are up 0.31%. Tesla down just a little bit today. Nvidia up a little bit today, 0.35%. Meta 334 down just a little bit. Meta about $7 away from its 52-week high. SoFi touching $8, up 0.51%. Microsoft 377. CleanSpark is down 2%. MicroStrategy down 0.77%. Some of the Bitcoin stocks are down just a little bit for the day, not too much. Robin at 1155, opening up down about 0.86% of the day, now 1153. S&P 500 464. We are at a 52-week high on the S&P 500, which is just really nice to see the S&P 500 do what it's doing at this levels. Did not expect the S&P to continue to rally, but the S&P is doing what it needs to do, even though big tech is not necessarily leading the way on this further rally. 464, we have 465 in the pre-market right now, 464.44. We got Hut 8 Mining down 3%, Bitfarms down 1%, Riot down 1.75%, Marathon down 2%, Coinbase down 0.79%. Coinbase was actually up yesterday as Bitcoin continued to rally, so we saw that going up as well. Chris says thoughts on Path. Path is really interesting to me. Kathy has been selling a lot of Path right now. It is at $17. It had a nice little, well, it's at 23. It was at 17. It was actually at 12 back in May. So it's basically doubled, and Kathy has been selling a lot of it. I think she's still underwater on her average, but the shares that she bought a couple months ago, she has made some money on. Tristan in the chat says, hey, man, joining from Germany. First time that I'm able to catch your live stream. Happy to be here. Thank you, Tristan, for being here. Really, really appreciate it. And you bring up the bot. In a little bit, I'm going to bring up that new Tesla bot video. It is absolutely incredible, the Tesla bot that has come out yesterday. They essentially announced version 2 of the Tesla bot. And it's a minute video I want to show you guys in a little bit. It's just insane, the bot that they have put out, and essentially the human-like characteristics of that bot that they've been able to bring to market. So we're going to talk about that in a little bit. Market's not super excited about it right now per their stock price, but in general, I mean, it makes you think, oh my God, do I not have enough Tesla if this bot actually becomes being the thing that it can become being. PayPal 58.84, that's down a little bit. Honest $2.83. We got Robin at 11.54. Google finally green for a little bit. Google has been having some red days. Google finally getting a little green after basically being a cheater and losing their Epic Games lawsuit. So we're seeing Google come up a little bit today. Disney 91.15, Salesforce 257. For those that are just joining, PPI came in lower than expected. Same thing with CPI, not lower enough to get the market super excited, but it was lower. Jerome Powell will be talking at 2:30 p.m. Eastern Standard Time today, likely going to be pausing rate hikes, signaling that rate hike cycles, I believe, he'll probably say we're data dependent, but I'm pretty sure he's going to signal that it's done. The question simply becomes when he's going to do the cut. And I think he's going to say that cuts aren't coming anytime soon. And so we'll see how the market reacts to that when that happens. TFC 34.04 down 0.18% today. Verizon 37.08. We got Shopify 72, Adobe 627. Overall, basically flattish market. Nothing too crazy that we're seeing. Palantir 1757. But Jerome Powell is going to decide a lot about where this market is going in a couple hours at 2:30. Are you still bullish on PayPal? Yes. I have a $10,000 position in PayPal. Look, I think PayPal is eventually going to run. It's going to take time for it to run, but eventually the market will wake up and realize they probably need 2 quarters of just like flawless execution and increasing some of those transaction margins. By the way, for those that don't know, PayPal and Venmo are the top 2 and 3 stocks on the US App Store. Let me actually pull it up right now in the finance section. So for those that say people don't use PayPal, look, I know people might not use it as much, but if you look at this right here, Cash App is number 1. That's from Square. And then PayPal and Venmo are 2 and 3. So, I mean, like, people are downloading these products. They are definitely getting users. The question simply becomes, can they monetize them in a more meaningful way? Okay, let's go to this Tesla video that I want to show you guys. So this was the Tesla bot they put out yesterday. Big implication for Tesla shareholders. If you haven't seen it, it's quite incredible. Let me know what you guys think. Here is the Tesla bot. I'll be talking over it so that to play the audio. But they had Optimus Gen 1 in March of 2023. And this is the second generation of Optimus. And what you're going to see in terms of how it's able to like just operate, just pick up things is insane. Quantum Leap from South Korea. Quantum Leap, thank you so much for being here. Really, really appreciate it. Hope you are having a great morning or a great evening in South Korea. Thank you for being here as well. So there you go. Optimus Gen 2. I mean, when you see something like this, it really makes you think the bot isn't that much of a fantasy. It makes you think that maybe this is real. Maybe this is actually happening. Maybe this is going to be legit. And, Carlos was talking yesterday on Finance Junkies. What if the bot is able to build their cars? What if you don't need human workers doing this anymore? The margins are going to exponentially increase if you don't have to pay workers $25 an hour. It's a fixed cost for a bot. And then, what if the bot's able to do a lot of other things in terms of our day-to-day lives, and how much would people be willing to pay? It's pretty crazy. I know Boston Dynamics is a company that's been working on robots for a long time. It looks like, I've never seen a video like this from Boston Dynamics. It's about the dexterity of how it's holding these eggs are just like, this looks like a real human that's holding these eggs. The amount of AI, the amount of machine learning, the amount of sophistication. This is why Tesla stock goes up or down. It's really it's why I started my position as well. I started my position a couple weeks ago. My goal is to get to at least 50 shares. It's because this thing is not a joke, and it can dance. It's just off the chance that Tesla figures this out and figures out how to commercialize this and really bring it to the markets. I think you would want to have some Tesla allocation there. So really, really incredible stuff going on from Tesla. The Boston Dynamic robot dock has nothing compared to the Tesla bot. Yeah. Boston Dynamics has been working on this a long time, and the Tesla bot is it seems like it's just a little bit more magical when you look at it. Tristan says, I cannot believe how precise the bot can move each individual finger. Yeah, again, that dexterity on that bot. And look, when you have a bot in the broader ecosystem, in society, linked to need something that can actually do things in a meaningful way. If you have a bot do cooking or, clean up around the house, going to need to have real dexterity. It's going to need to be able to really work. And it seems like Tesla's on the right track of doing it. It just seems like Tesla, we were talking about Palantir about 20 minutes ago. Palantir had a new partnership they came out with today with UniCredit. They're an extension of a partnership with one of the largest banks in Europe, one of the main banks in Italy. Palantir is continuing to have these little partnerships here and there that are showing that they can vertically integrate across sectors. And that's going to be really exciting for them as well. Let's take another look at some of the equity markets, and then we'll talk a little bit more about rate cuts. Choppy day in the markets indeed. We are seeing some stuff that's red, some stuff that's green. I also want to check on Netflix stock. And I'll tell you guys why in a second. Palantir 1752, basically flat on the day, just green a little bit. Netflix 463, up 0.27%. Netflix released for the first time ever data from the amount of viewing hours that people have watched on their platform. And this is from January to June. Most of their global titles have done really well. You season 4 did 450 million hours of streaming. Sex Life, another show that I liked, is about 175 million hours. A lot of their original movies or shows did very, very well. And it goes to show that Paramount, HBO Max, these other guys just can't compete when it comes to Netflix. They just cannot compete. The only reason Paramount shares, oh wow, Paramount's down. I thought Paramount was at $20 the other day because they were going to get bought out, or there was a rumor that they were getting bought out. Now they're back down to $15. Paramount has a $10 billion market cap, and they have $15 billion in debt. This is not a company, a media studio that can survive, in my opinion. It's going to be very, very difficult for them to be able to make it out. Netflix is probably not going to buy them, but consolidation likely going to happen again. Consolidation was happening 10 years ago where Netflix had The Office, Friends, etc. Then all these media companies, they decided they wanted to make their own streaming networks. They realized it was really difficult to get users. I think that consolidation might come back to Netflix, and it'll be more beneficial for shareholders of Netflix because they're just going to have better content than everybody else. Palantir now red on the day, 1740. Nvidia's green, Meta's green, Microsoft's green, SoFi's green, S&P still green, 464. Seems like other companies out of those big 7 are performing well for the S&P 500. GameStop is at 1530. Let's check on Lululemon. This is a company that got recently added to the S&P 500, just below $500. It was at 507 2 days ago. This is a company that sells leggings for like $200, which is just stupid in my opinion, but there's enough consumers in the United States that are willing to buy that. So Lululemon is continuing to do it. Lululemon $60 billion market cap. So they continue to show that they can sell their lemons to women that have money to spend on leggings. So that's what you got on Lululemon. Where Unity software at $33. We got Ethereum is up a little bit today. Uber 62.32. Uber now in the 60s. Uber was stuck in the 40s and 50s for a good year. Uber now in the $60 range. Uber now in the S&P 500 as well. McDonald's is up. McDonald's nearing all-time highs at 292. All-time high or 52-week high was 299. Market cap of 212 billion. McDonald's wants to build about 8,000 new stores across the United States. So McDonald's looking to expand. Celsius did that stock split. A lot of people have been asking about Celsius. I don't know enough about them, but they've done really well since 2020. $49.86 right now. They did a 3-for-1 stock split. They peaked at about $68 on their earnings about a month ago. Right now, market cap of $11 billion. Got to do more due diligence on Celsius to be able to understand it better. Meet Kevin's PP ETF at 2408. Where's Enphase? Where is Enphase? Enphase, wow, $98. Enphase ran to 115, 113. Now it's back down to 97. I think that CPI jobs report that showed that interest rates are probably going to be higher for longer likely is hurting Enphase because Enphase is so dependent on interest rates coming down. Palantir, right now, Robin at 1150 and Palantir, where is Palantir? Palantir at 1754, just green, up 0.2% on the day. You don't own Lululemon pants, Amit. Love the pants. Dude, I just can't. Lululemon guy pants. I'm about to search it right now. How much are they charging? $128. Dude, who's paying $120? I just can't do that. Maybe you guys make way more money than me in your cushy tech jobs. That's fine. But $128, bro? This pant, there's no way you're telling me these. Dude, I bought the same exact looking pants from Kohl's. Okay. Kohl's is a retailer in the United States. Cost me like $25. The brand is Apartment 9, APT.9. Search it up. It's a beautiful brand. I wore the pants in Vegas. They fit great. They looked great. I took a bunch of pictures of them on Twitter. I paid $25. $128? You've got to be insane. You got to be kidding. This is stupid. Who the hell is paying this shit? Like this is how I know that the economy is still inflated. There's no way you could be paying this shit. This is insane. What else do they have? How much are their joggers? Yeah, $128 for joggers. Of course. Why not? That's come on now. Come on now. This is ridiculous. All right, let's see what their hoodies are. How much are their let's see how much. Okay, let's see the sweaters. How much are their sweaters? This is $198. Really? That's for a cardigan. Of course. That they pay $3 to make by child slaves in China. $198. Alpaca wool blend cardigan sweater. Get the heck out of my face. This is sure. This is why the stock is up. This is why you should buy the stock, because the margins must be insane. But $198? I agree with Luke. I'd rather wear no pants. I can't do it, dude. I can't do it. I can't. No matter how much money I make, I can't do it. I just one day, if I become super rich, I cannot do it. I just can't do it. I can't do it. I'm sorry. I can't do it, folks. I cannot do it. But for the stock, that's not bad at all. It's not bad at all for the stock. In America, you get what you pay for. That is true. That is true as well. So let's take a look at this. We were just talking about a couple of different things in regards to inflation and interest rates. I think I wanna go here. Let's go here. So we have the Fed today. Wells Fargo talking about what they believe is going to happen to the stock market today. Based on the Fed, Jerome Powell will be talking at 2:30 p.m. Let's get an update on what they think is going to happen today, 2:30 p.m. when the Fed speaks.
Less than 1% from an all-time high. This ahead of tomorrow's big Fed decision. Wells Fargo Securities expects a knee-jerk bullish reaction to that news. Mike Schumacher is the firm's head of macro strategy. Knee-jerk bullish, but I guess that implies that you don't think that's the right reaction.
Probably not. Really, it's based on the idea, Melissa, that almost everyone we talk to thinks Jay Powell is going to come out and try to talk down the idea the Fed is going to ease soon. So the bar is really high. How can he possibly top that? I doubt he can. And actually, if you want to look at a recent example, go back to December 1st, He had an appearance down at Spelman College, and he didn't really sound dovish, but the market said, well, he wasn't super hawkish, so was off to the races. Bond yields down, equities up. Maybe it's not as dramatic tomorrow, but something sort of like that, I think, is on tap.
Do you think that he will try to be super hawkish and just the markets just will not believe him no matter what he says?
The problem is he's not a super hawk. He'll try to be hawkish, but in his core, he's not really a hawkish guy, in my opinion. So it's difficult for him to try to make that point and drive it home. I think that's the issue.
Sorry, speaking of core, super core, which is one of the things they talk about watching very closely, that there seems to be some sort of reacceleration going on there. So we can talk about this number being cool, but the one number they seemingly look at is going the wrong way for them.
Yeah, super core is ugly. I mean, if you look at the annualized rate over the last 3 months, I know it's a mouthful, it's above 5%. Now, the Fed's target is 2, it's not 5. Even if you look at core inflation, same math, annualized 3-month rate, it's right around 3%. And in fact, it's been around 3% for the last 4 to 5 months. It's down a lot, but that really occurred during April, May, June, that time frame, not recently. So momentum, it's stalled.
I agree with him. I think Jerome Powell is not a hawk. He's going to try to act like he's a hawk, but he's not naturally a hawk. And so it's going to be a little tough for the Fed to be able to really convince the market that things are going to be, that they want to cool down, especially if they don't sound convincing enough, which is why everyone's going to be listening to him in depth. Millions of people across the world, which is a small segmentation of the broader world population that actually cares about every little, syllable this guy says. But we're going to be listening to him because we need to know what he says. Philip Rizzo says, I spent $650 at Allo the other day for my girlfriend, her sisters, and my mom. This is what happens when you buy Bitcoin early, folks. That's what happens. Okay, we got some breaking news here. We got some breaking news, and it's actually interesting news because I've been thinking about this stock for a little bit. Pfizer stock is down 10% today. Pfizer stock. I don't know why it's down. Probably something came out that put it down, but year to date, the stock is down 50%. Over the past 5 years, it's down 37%. Past 6 months, down 35%. If you look at the max chart, where Pfizer peaked was back in 2022 at $54. At COVID, it was at 36. And obviously the vaccine picked it up, and now it's coming back down to some pretty bad levels. The reason I wanted to bring this up is because I've been talking with Steve about this company. Steve actually called me up last week. And I know a lot of people don't like this company. A lot of people don't agree with it. If you're just purely thinking about money, this is a company that has a lot of cash on their balance sheets, that is doing a lot of strategic acquisitions. Me and Steve are probably going to do a podcast about it. He's doing a lot of due diligence on Pfizer. I don't think I want to buy it. I don't understand enough about it. The dividend yield is 6.35%. That's another reason why it's really exciting to him, because you're getting 6.5 on your money, which is better than nothing. And then the question becomes, is there enough share appreciation baked into the stock, kind of like a TFC and Verizon, that we're giving you 6-7%, but we're also at multi-year lows, for the point where Pfizer only has anywhere to go but up. So we're going to see what happens to Pfizer. We're going to probably put out that podcast soon, because he thinks the company is dramatically undervalued, and it's like being stupidly treated by the market for the dividend they're giving and all the cash that they have. Now, granted, Pfizer doesn't have a catalyst, in my opinion. The problem with Pfizer is that COVID's kind of done. So, what is the next thing you're going to sell to the market? They do have a lot of drugs that are like very well used and licensed and all that stuff, but I think they need a catalyst for a big push of momentum. And so I guess we're going to kind of talk about what could be their ability to just raise the stock price higher. Maybe they do buybacks, whatever they have to do, but there's no COVID vaccine anymore to get them to continue to get them up there. Oh, it says we need a new catalyst. Someone called Bill Gates. Look, I didn't say that. You said that. But I'm not saying you're necessarily wrong or right. I'm just saying that's an interesting comment. June says they have a huge pipeline of other medicines. That's what they do. And that's what Steve was talking about, is like, dude, because I said, like, what about, the COVID vaccine's done? He was like, it doesn't matter, because they have so many drugs in their system. They just have such a large ecosystem that it's more likely than not that Pfizer is going to start milking some of these drugs, and they're going to start printing cash, and the market's just not going to be able to understand them at a deeper level. So we'll see what ends up happening, but it's one thing I wanted to bring to you guys' attention. The stock is at multi-year lows. It's fallen dramatically from 2022 when the vaccine was at the height of its level, and it's down. And if it's down, then maybe there is some opportunity there for a 6.5% dividend with room for appreciation when the market's going to, get a little bit more excited for it in the long term. So we'll see what ends up going from there. Now, here's the last thing I want to watch. This is our girl, Gabriela Santos. She debated with a bear last night. And with that bear, Veritas's Greg Branch, you guys might know him if you keep up with CNBC. This dude has missed out on every part of the rally this year. He has been bearish. He has made 5% on his money, and that's pretty much it. Gabriela Santos is, very bullish on where the market's going, chief economic strategist at JP Morgan. So they kind of go head to head right here in the next 4 minutes. Let's end off the market open with listening to them talk and see what they think about rate cuts, especially since we have that decision coming out later today.
Let's bring in CNBC contributor Greg Branch of Veritas Financial Group, who undoubtedly has come on today to say, Scott, I've changed my view. I've turned from a bear to a bull. All the calls about the Fed hiking are over. I'm more positive on stocks than I've been in months, correct?
Oh, Scott, you know me better than that. I wish I could say that, but that is not my message today.
Now, why? Why isn't that your message today?
So I will put it in the context of the things where I disagree with Gabriella, actually. I think that the Fed has gone out of their way. In as much as everyone declares that this war is over and the rate hikes are done, they keep going out of their way to reserve judgment, to have us keep an open mind that if the data starts going a different way, that they will raise again. The part of the narrative focused on cuts, and by the way, I think that cutting because they can is a luxury that you and I can talk about, but that the Fed does not have and does not enter their mindset. But the narrative, the part that narrative missed, the part that it skips over, is that we haven't even seen the full effect of the 500 basis point raise yet. And the fact where the correlation is broken down is not necessarily in the demise of credit, because we've seen credit growth fall off a cliff, but it's in the spending. We haven't seen the spending react the way we would necessarily expect from a 500 basis point hike. We haven't seen.
So basically, he's saying the rate hikes we've done, the full effects haven't happened. Everyone's saying, oh, if the economy breaks, that the Fed will just cut. His argument is if the economy breaks, the Fed will allow it to break. They will not cut to save the economy because they want the economy to break to kill inflation. That is Greg's argument. And a lot of people just don't agree with that. They think, hey, if the economy breaks, the Fed will cut. His argument is like, nope, that's not going to happen. And you guys are in for a rude awakening.
Companies, in terms of jobs and the job market, affected the way we would expect. And the question becomes for the Fed, is that delayed? Is that structurally muted? But that question has to be answered first before we can get to any discussion about rate cuts. And when we get to that discussion, it will be because they have to, not because they can. Because they can is reserved for a time where we haven't seen generational inflation and we're not worried about it coming back. Now, in terms of that fight being over, I think that that's difficult to pinpoint when we haven't really seen significant disinflation in quite some time. We've been stuck in a 30 to 40 basis point core range for the last 16 months, absent 3 months, one of which was last month. It remains to be seen if 20 basis points is the new trend, but we certainly can't extrapolate that off of one day.
All right, I'm going to let Gabriella respond. Let me let Gabriella respond first, and I'll come back to you, Greg, in just a moment. What do you have to say to that? Because look, Greg's not the only one who has a more cautious and bearish view, who suggests, look, everything that the Fed has done, I know you think it's all fine and good now, but it's not going to be. It's just a matter of when, not if.
So I do think the Fed will beat this drum that the inflation fight's not done quite yet when they release their decision and their dots and their press conference on Wednesday. And hence this idea that rate cuts are likely to come more mid next year, not quite early next year, and the Fed's not going to want to front run that. But I think there's two interesting debates here that Greg brings up. Number one, can inflation come down, because a lot of it were supply chain issues and not structural changes that makes this an economy more inflation prone. So can you have growth without inflation? We would say yes. And the second question, which is around the lag of higher interest rates, right? Are we yet to see it, or have we learned this year this economy is less interest rate sensitive than it used to be? And we're more in the latter camp, hence why we have a more constructive outview next year, including the Fed cutting.
That's right, Greg. Maybe it is just different this time. And there's so much focus I hear from you on what still might be. At some point, you have to focus on what is. And the might be may not happen. The only might be is that the stock market may continue to go up despite some of the concerns that the worst is yet to come.
That may be right, Scott, except we are seeing signs that it is starting to happen, but in a delayed sense. And so we are seeing signs of the consumer balance sheet being stretched, with delinquency rates rising, with the second derivative rising at alarming rates. We are seeing signs of corporations being more discriminating about their hiring, or at least adding jobs. Yes, while we don't have 12 million in terms of JOLTS opening anymore, 8 million is still a healthy number, and 200,000 of job ads is also a robust number when the break-even number is around 100%. And so we are starting to see on the fringes the impact of those rate hikes. And so I would not at this juncture be comfortable saying that we're just not going to see it anymore when we see it happen.
So essentially, Greg believes that the Fed is not going to cut rates, even if things get bad. Gabriella believes, no, inflation is actually falling off a cliff. You're not understanding the relationship that bonds and the bond yield and equity markets are having right now. And the Fed is going to be forced to cut rates at one point, which is going to lead equities to go higher. One of them is going to be right. So far, Gabriella has been right this whole year. And if her clients have listened to her, she's made a lot of money. Whereas Greg's clients have made 5%, maybe, because they've been out of the stock market. So, and on top of that, I mean, they didn't even talk about AI, earnings growth. I think there's just so many more arguments for the bull case, even if it's not a mega bull case, but at least a somewhat bull market in 2024 versus some of the, the more bearish arguments coming from the macro perspective. So we will see what happens. 2:30, folks. Jerome Powell will be speaking. 2 p.m. We will get the inflation report. I will not be able to go live for it, unfortunately. I'm really busy. Got a lot of stuff going on. I will be live tweeting it. So if you're not following me on Twitter, Twitter's in the description. Please make sure to follow on Twitter. And I'll tweet out some of the quotes that Jerome says and the interest rate hike pause or cut that we get today. Most likely it's going to be a pause. And we'll go from there. Word of the day, before we end it out, thank you 726 people for being here. It means the absolute world to me. Word of the day is pernicious.
Pernicious.
Deadly, destructive, exceedingly harmful. Let's hope that J-Pow today, Jerome Powell, is not pernicious towards the stock market. And we get to see if this can keep going. So we will end up seeing what happens today at 2:30 p.m. If you are not subscribed to dailypalantir.com/subscribe, email newsletter every single day. A lot of people have been enjoying the newsletter. I've started to do it every single day around 9 p.m., 10 p.m. Eastern Standard Time. It comes out. dailypalantir.com/subscribe, dailypalantir.substack.com. A lot of partnership news we're going to be talking about today in that newsletter as well. That'll be coming out today. Daily Palantir episode will be coming out a little bit later today. Finance Junkies, 9 p.m. We'll be discussing everything going on in the world of what J-Pow says. And as June says, the new dot plot is coming out today. The dot plot is basically the Fed's interpretation of where rates are going to be and how many cuts are going to happen over the next 3 years. And so we'll see if it's changed from the last meeting or if it's still pretty hawkish and where they think inflation ultimately is going to end up going. What topic does Daily Palantir cover? So, I mean, if you can literally go to dailypalantir.substack.com and just look at the example newsletter. It's basically a rundown of the news throughout the entire day. Like yesterday, we talked about Karp's new AI letter. We talked about, let me pull it up real quick. We talked about the short interest yesterday. We talked about, what else did we talk about? I'm just going to literally go to the Substack that we have. Yeah, we talked about the new LLM for Plascred partnership. We talked about short report. We talked about stock-based compensation coming down and showed some charts. We talked about Palantir's mixed reality product that Sham Sankar tweeted about. And then we talked about the case for Oracle to buy Palantir or not. So I'm going to put this in the chat right now if you guys want to check it out. Really, really appreciate you all subscribing. It means the world to me. It is free to subscribe. And that's pretty much it. All right. Thank you, everybody. I appreciate it. We'll see you guys tomorrow, 8:45 a.m. And we'll see what J-Pow does later today. Bye, everybody. Have a good one. Thank you.